Okay, we have Ashish is here, or okay. Good morning, Ashish. Thanks for joining us. I picked a couple of stocks. I don't know if you heard them, but basically Sundaram brake lining, Rane engine valves, also this SL Pro Pack. Your thoughts on some of these stocks?
Hi. The overall trend in the stocks that you are talking about has been on the upside definitely. And both for Sundaram brake linings and Rane brake linings, we can see there has been a very, very strong up move from the levels, from very low levels. So the stocks have probably doubled from the lower levels in just in few days, few weeks time. So one should use a very strict stop loss and avoid catching a top in these kind of stocks. I think any dip is going to provide a buying opportunity. So, for example, Sundaram brake lining, one can initiate long positions if we find any dip towards 520 levels, and one should ride the trend. It is difficult to know till where it is going to go because there are no higher levels and there is no resistance on the upside. And similarly for Rane brake lining, I think one can initiate long positions. It has given a strong move on the upside in today's session, and keep 1200 as a very, very important stop loss. It is little far away, but given the volatility, one has to keep 1200 as a stop loss, and we can expect a move towards 1400 or higher levels in this stock. And for the other one, SL Pro Pack, I think it has today given a gap up opening and is moving higher, but I would rather prefer Rane brake lining or Sundaram brake lining over SL Pro Pack.
All right, two other interesting stocks, Ashish. One is Venky's. Again, if you can put up a 1-year chart, and another one is Sarda Energy and Mining. So you can see it for yourself how clean these charts are. So I'll put up the Sarda Energy and something mines or minerals or whatever. Yeah. So there you go. Ashish, you got a thought on either of these two, Venky's and Sarda Energy?
Yes, see, Venky's structure again is similar to what we have been discussing about the other stocks. But in Venky's, there is a resistance which is coming in the zone of 620. So as of now, there is still potential for the stock to go up. The momentum is strong on the daily charts, and it has formed a strong bar and showed some kind of a retracement, which looks healthy enough, and the breakout should happen on the upside. And Sarda Energy again is probably trading at the 52-week high, so I will definitely again prefer Sarda Energy over Venky's because there is no resistance for Sarda Energy, and it has also reversed from a channel support, so there is still potential, and one can create long position on Sarda Energy, keeping a stop loss of 187, which is around 10-12 rupees from here, and we can expect a move towards 210 or higher levels.
Right. We also have Shrikant with us, Shrikant Shetty, Vice President at Motilal Oswal. Shrikant, let me start with Raymond, if I may. What's the excitement in the market for Raymond? Is there something they're doing right now? Have they done something suddenly? Have their margins gone up?
So we don't have active coverage on Raymond, but broadly what I guess is this stock has normally moved only on the real estate piece, and we're also seeing a general interest in textile space. So maybe people are getting a bit excited about the potential there in terms of the brand or in terms of growth. But whatever little bit I understand or know about this company in terms of growth, we have not seen any strong growth performance, nor is it on the pipeline where we are looking at very strong kind of growth. It's probably more because of the brand or somebody getting exciting about it, or probably a potential in terms of unlocking of value of the real estate. That's something, that's a story which keeps going around all the time. So I really don't know if something on that is on the works. But in terms of more textile, I think if you want to really play textile, I think there are better stocks like Arvind. I think Arvind is a much better story to play from a branded textile play. I think Arvind would be a good one to look at. Even if you want to look at other plays like from branded textile play, I think one can look at Aditya Birla Fashions from a long-term perspective, because these are a couple of companies which are there where you can participate from a long-term perspective into the branded textile play.
So let's look at Jubilant Life Sciences. Can you bring up the chart? Jubilant Life Sciences chart is very good, but once again, in Jubilant, is this under your coverage, Shrikant? Anything particular? Also, the big question about is there significant value or upside in the stock at this point?
Jubilant Life is not under coverage, I'm so sorry.
Okay. Ashish, have you looked at Jubilant Life Sciences and Raymond just technically?
Yes, see, Jubilant Life Sciences, after touching around 300 levels, I think in July, there has been a substantial exponential rise, nearly vertical rise in this stock. And even now, the stock is trading near the new highs. So as long as it manages to protect the weekly low, so one very important technique that anyone can follow is looking at the weekly low. So if the weekly low of the prior week is protected, then the trend continues to be positive and one can continue to stay long on the trading positions. So since 300 levels, you will not find a single close below the prior week's low. So that is a simple technique, and that clearly shows the momentum is strong and trend is upside on Jubilant Life. And for Raymond, I would not prefer the stock given the fact that in 2013 there was a sharp fall from 480 levels towards 200. It went from 200 to 560, then again from 560 to 360. So it has been all over the places all the while. So it's very difficult to understand whether the stock is starting a new strong trend or is it just again going to be oscillating around all the areas.
Three more stocks, Ashish, if we can look at Dharani Sugars, Sumit Industries and Kamdhenu Ispat. I'll just put up all the three charts if we can. Dharani Sugars, just a 1 month chart. We don't need a 1 year chart on this one. Sumit Industries, just more from a day trade kind of ideas. And Kamdhenu Ispat. Your thoughts on these three, Ashish?
Sure. See, overall trend for Kamdhenu Ispat and Dharani Sugars, I think in the sugar space it's little challenging because at any point of time if there is any intervention or some news or events comes in, then this stock suddenly reverses, and it's better to avoid sugar stocks unless we see a very, very strong up move. So for Dharani Sugars, I think if someone is long right now, he can hold on with the position of stop loss of 45 and expect a target of 52, but not to be too optimistic with this sector because the overall sector is always volatile. And with the other stocks like Sumit Industries, we can see it has formed a rounding bottom and given a positive breakout above the level of 17 where the neckline was placed. So as of now, the stock is positive, but again, I would avoid this given the fact that the volumes are erratic and it looks like a spike upside and then suddenly it reverses again. So there is no trend as such. So it's better to avoid Sumit Industries.
Right. Shrikant, what are your thoughts on Jubilant FoodWorks and Castrol? Again, they may have reacted to news, but to me, Jubilant looked like some bigger problem. Just a CEO leaving would not be enough. Is it possible that there are accounting issues, there are other issues which are starting to reflect in the stock? And the CEO may just have been a trigger for the stock to go down. And then on Castrol, if you've looked at its potential.
Right. So to talk about accounting issues, I think it will be a bit too early. I mean, it will be too speculative rather. But yes, I mean, CEO leaving is only probably one of the reasons for the correction. If you look at a lot of reasons have been there where the stock has been correcting earlier also. The same store sales growth has been lower. I mean, they've been predicting higher growth and they've not been able to deliver up to the expectation. So broadly, the urban demand has been slow. We've seen that Dunkin' Donuts, the recent one, has not really played out. They've done a lot of investments into that, so that has not played out up to the expectation. So there have been a few disappointments out there in the performance for Jubilant FoodWorks in general on the business front. We've seen cost pressures also to some extent come in, so we've seen margins being lower, and of course the broad valuations has always been high for Jubilant FoodWorks given the overall potential of the business. So under that backdrop, I mean, when you have business not doing particularly well, the outlook still remaining uncertain, and at that point you're seeing the CEO leaving, so you have more concerns coming into this stock, and that's why we are seeing the reactions. Of course, if there are more into it than what is visible, then I think there would be more downside. So we need to see that.
Shrikant, would you agree that the present value of money is more than future value?
That's always the case, right?
Right. Except now the Bank of Japan has made it a fact that it is not a fact, because the governor of the central bank, Mr. Kurihiko Kuroda, says, I'm going to put a 10-year target and interest rates will be 0 for 10 years. So according to him, present value of all future cash flows is exactly the same. Now, if this is the beautiful new world we live in, where present value and future value is exactly the same, then Shrikant, why invest? Why save? Just spend it, because the value of future money is exactly the same as today. So Mr. Kuroda is just changing the rules of the game. I mean, he's telling us to go to restaurants and splurge and never save and borrow from banks that will never need to be paid back because its interest rate is zero.
That's what the stimulus they're trying to create for the economy, which has not been growing. It's not applicable to Indian economy, unfortunately. So it's like we still have positive interest rates. We are able to generate positive interest rates. That's a positive real rates as well. So India is a much better scenario compared to what Japan is. So they have been in an economy which has been slow for a number of years, and they're trying to improve that. So I'm sure these strategies are new, unexplored, and clearly one needs to see how these things play out.
Well, certainly the Japanese seem to be rewriting economics books. So we may all have to, Shrikant, Ashish, will have to go back to college again to figure out, because there's some economics we never understood now. So anyway, let's take a look at some other stocks now. So some of your public sector banks have taken a massive hit today. I don't know why. For the week, actually. So let's bring up UCO Bank. Let's bring up Central Bank. You'll see if the trend's been interrupted. A 3-month chart, Smita, or you can give us a year's chart, whatever you prefer. IDBI Bank. Let's look at Bank of India also. Shriram City Union. So this is, today is fine, but if you can give me a longer term chart, I just wanted to see what's happening. 1 month maybe. So let's see. So Ashish, is there any interruption in the trend in UCO, Central, Indian Bank, Oriental Bank of Commerce, or are they intact? Because the last 1 or 2 weeks, if anything, maybe they went into some kind of consolidation.
Right. Right, Anshu, absolutely. These banks have been, for example, if you look at UCO Bank, the medium to long-term trend has been negative. The stock started falling from 115 levels about 2 years back, and it is currently at 38. So it has been a crazy fall, and still there was some bounce back which we witnessed from 30 levels to 45, and after that we are again seeing some kind of a correction. So I don't think that the PSU banking sector as a whole is out of the woods completely, and consolidation is something which should happen at such lower levels. We should start expecting some range-bound movements, and that is going to form a strong base for future. But for now, I am not too bullish even for Oriental Bank, Central Bank of India. There was a sharp move on the downside, then the stock again rallied sharply again back towards the level where it was in 2015. So some consolidation has to be there in such stocks. Otherwise, the rally is not going to be sustainable.
Okay, let's bring up 2 more stocks. Edelweiss Financial Services. Give me a 1-year chart would be fine, Smita. Also, Bayer or Biocop Science, depending on whose German is better, but I don't know. What do you think it is, Bayer? I'll check with our producer. You agree? It's Bayer? Bayer. All right. We got 2 German experts. It's Biocop Science. Let's go with it. All right. Both charts are looking beautiful. Ashish, your thoughts on Edelweiss and Biocop Science?
Edelweiss has actually shown a very, very strong impulsive rise from the lows of 45, and I think the trend as of now is intact on the upside. So the medium and the short-term trend both for Edelweiss is going to be positive, and one can use a stop loss of 105 levels, which is below the previous pivot. And as long as the stock manages to protect that level, one can continue to hold on to the long positions. And for Bayer Crop Science, if I'm pronouncing it correctly, then the stock has been consolidating for quite some time in 2016, and I'm expecting a breakout should happen on the upside, because when the correction happened, it was not that deep of a correction, and the movement on the upside is picking up. So I'm optimistic about Bayer Crop Science, and one should can create long positions in this stock.
Well, automobiles, as you know, have been doing exceedingly well. I may be leaving Mahindra and Mahindra. That stock hasn't really done much. But anyway, I'll put up Bajaj Auto for you, TVS, Hero MotoCorp, Maruti Suzuki. Shrikant, you'll share this with me that it's not a question of how good a stock is too high a price makes any stock bad, and too low a price can make any stock interesting. I mean, I'm assuming they're not shutting down. In that scenario, Shrikant, what do you make out of the valuations in all these automobile stocks?
No, I think, see, most of the stocks you would find them more closer to what fair valuation is, probably, at least based on the valuations you're looking at currently. Barring probably M&M, which has not been a big performer, so maybe that's available at a slightly lower valuation in that sense. But those are stocks which are performing, whether it's Maruti, whether it's Hero Motor or Bajaj Auto, where I think valuations are reasonably fair. But then we're also looking at growth opportunities out in this space, whether it's Hero, Bajaj or Maruti. I mean, in the four-wheeler space, Maruti will clearly be the leader in that space. So Maruti is probably a premium in that segment. So yes, valuations are reasonable, but I think we could still continue to be invested or be buyers in this from a medium to long-term perspective. Maybe not in an immediate short-term perspective. Yes, we may not have a range-bound kind of move in these stocks but if there is slight improvement in a demand trajectory which is expected, probably in the festive season, or overall demand scenario starts improving, then I think these stocks could still perform.
Right, Shrikant. Hold that thought. Just one. I have just three more stocks I can take now. We're totally out of time. But MBE, MMBI. You can give me an annual chart on this one. Also, Rane Madras. Rane and in brackets Madras. I don't know what's happening with this Rane group, whether they call it valve or braking or whatever else. All the stocks are just, they're behaving like the Tata Metallics, if you remember. We had that, everyday freeze. Even this Rane Holdings, same phenomenon. Ashish, your thoughts on this Rane Holdings, Rane Madras and MBE, MMBI?
See, Rane Holdings and Rane Madras, if you look, I think the stocks are behaving very similar to what we saw on Rane Brake Linings, if I remember correctly. And the chart of Rane Madras is, as of now, is strong and positive, given the fact that the prices have rose from 360 to 540 levels. Some correction or some retracement cannot be ruled out, but that will provide a good buying opportunity. And but one should definitely use a strict stop loss because the volatility is high even during the rise. The stock have been retracing 50% of the up move, so volatility has been high in this stock, and one should use a very strict stop loss. So for Rane Madras, one can stick with a stop loss of around 500 levels on closing basis, and if the stock manages to cross about 560, then we should see much higher levels.
Right, Ashish, always a pleasure to speak to you. Thanks very much for joining us and walking us through the technical. Shrikant, always a pleasure. Welcome to the new world, Shrikant, where present value equals future value. We'll discuss that more some other time. Vice President and Motilal Oswal. Thanks again for joining us. Markets are doing just fine. 8820 is what the ticker reads on the Nifty at 28,670 odd on the Sensex. From Diva, our producer, Smita and her team, which puts up all the graphics, and everyone here. Thanks for making us a part of your lives, but not before I can tell you what's coming out on Corporate Eye. That's CMD of NBCC and also the Vice Chairman and Managing Director of SL Propack. And goodbye for me.